This is Brad Wolff, and this is the end of day Emini review for August the 11th, 2022. Al marked on the chart, parabolic wedge, then bear trend with two legs down. Here was the parabolic wedge. 1, 2, 3, or you can say 1, pull back 2, pull back 3, two legs down. Here's leg 1, which had a couple legs down, followed by a pullback, and then leg 2. Now, with this day, we gapped up, and whenever you have a trend from the open, especially after a big gap, and the bars are not uniform, that is an issue. And it's an issue because it's a sign of unsustained buying. Here, this was good for the bears. Big bear bar, another big bear bar. It's a sign that the market is probably going lower. So if we go back to the beginning of the day, it's a reasonable buy above this bar or above here. It's difficult to buy above one of these bars for the simple fact that it could be there's no gaps and it really could fail above bar 1. Bulls will they'll buy the inside bar, they'll also buy above this bar or even above here as the market gets stronger, but with it being stronger, it's becoming more climactic. A lot of bulls will take profits on this bar, betting that the market's not going to go too much higher. Aggressive bears will sell, betting on the parabolic wedge here, here, and here, and they'll hold for a couple legs down. Bears that sold here need to stop probably above here, if not higher, because we could easily test back to this high close and turn down, which is what happened here. Second entry short, bears will sell, betting on the test of this gap, this high, maybe the open of the day. When you get 3 consecutive bear bars like this, it's strong enough sell-off that you're probably going to get a second leg down. So this is really a bad high one buy because, as you can see, the bulls that bought these lows and more lower got trapped on this gap, and the bulls used this bar to actually sell out of longs more than they did to buy above the bar. After 3 consecutive bear bars, the odds favored a second leg down. Bears, they'll sell below here for the breakout pullback short. They'll sell below here. They'll sell below even this big bear bar here, even though it's a new low of the day. It's a tight enough channel that the first reversal up is probably going to fail. However, it's a warning that the market may not go much lower. Bulls had a doji and its consecutive sell climaxes, so the odds are the market may start going sideways and possibly test back to the open of the day. Stop entry buy. Some traders will take it, but they probably need a wide stop below this low, and it's probably better if they can scale in lower. We could easily fall below this low and turn back up, which is what happened here. We went below the low on this bar, had a second leg down, and reversed up. Traders can sell. If always in bears got out above this bar, in theory, they have to get short again below this bar or below this bar. Really difficult to do that because this looks like we're forming a bottom of the trading range or a lower trading range on a trading range day. And if that's the case, a lot of bears don't want to sell too low in the range here or here, especially with this much sideways price action. Bull breakout above the moving average, probably going to at least get a second leg up, test the open of the day. Some bulls will buy above here. After 3 consecutive bear bars, some bulls will not buy above this bar, betting that this is a test of the high close here. Other bulls, they'll wait for a 2-legged pullback and buy this bar closing on its high. The problem with buying here, though, is you're very close to the open of the day, which is a target. It's a 50% pullback of this sell-off, and it's a possible failed breakout of these highs. So a bull buying above this bar here, when they see the bad follow-through, they will be quick to exit below this bar or below the next 2 or 3 bear bars. By the third bar, it's probably sell the close. First reversal up will fail. Bear breakout, odds are the market's going to have a second leg down. The bulls got trapped here, and it became another small pullback bear trend that sold off for a second leg down. So bears, probably sellers above. The bulls, any bull that bought this low got trapped on this bar during here. And at this point, it became sell the close with this bar, sell the close with this bar. However, you're below, you're getting really close to the bottom of the range. However, we have now trapped all the bulls that bought anywhere here. So it's a sell the close market, doesn't look that strong, but the market's forming gaps, so it's very dangerous to start to be buying when the market's forming gaps. So a lot of traders, they'll sell above bars, they'll sell the second entry short here, betting on a double top, they'll sell this low, they'll sell any of these lows. When they see this big bear bar, they will be quick to buy back shorts on the low close or even above a bull bar. Some bears will sell above the bar, betting on a second leg down, at least sell for a scalp. Overall, by the time the market reached the second leg, so it was a measure move, leg one, pullback, leg two, and after this big bear bar here, a lot of traders would buy back shorts and just wait for the next day. There's not enough time left in the day. With the market being at support, a lot of traders would not be willing to do anything else. With the market being at support down here, and with the market being late in the day, a lot of traders would not be willing to do anything else for the rest of the day. If you found this video helpful, please consider going to theBrooksTradingCourse.com, where you can learn more about these blog posts, as well as learn more information regarding the video course. I hope you enjoyed this video.